Hello and welcome to this IBSA series of podcasts on considering countries to where UK residents may wish to emigrate in light of the non-dom changes introduced by the Conservatives and the likely tightening of these rules under the new Labour government, including bringing foreign trust assets within inheritance tax, an increasing capital gains tax rate to income tax levels, and particularly those aiming at fund managers. My name is Roy Saunders, founder and chairman of the IBSA, the International Business Structuring Association, which is a multidisciplinary global association of entrepreneurs and their professional advisors dedicated to sharing their expertise with each other within a great networking platform. Our current series of 15-minute podcasts will review beneficial tax regimes in Italy, Spain, Portugal, Malta, Cyprus, Switzerland, Singapore, and Dubai. So today I'm joined by Darren Joseph of Moores Rowland Asia Pacific, who's an international tax advisor primarily based in Singapore, but who seems to be popping up in lots of other countries as well, and who has worked in international finance all of his adult life. Darren, we've had a lot of chats together.
Roy, thank you very much. Once again, it's an honor and privilege to have a quick chat with you. My name is Darren Joseph with HED.Tax, which is a member of Moores Rowland Asia Pacific. So we're a team that seeks to demystify the sometimes confusing world of cross-border tax, working with private clients all over the world.
What are the benefits to them of coming to Singapore? Why do high net worth individuals and millionaires base themselves? Is it foreign income is exempt from tax? What is the income tax levels and so on?
So again, I'm going to swim against the tide. And I think that for high net worth individuals, their primary directive is never really taxation. Of course, there are exceptions to the rule, but when we look at the research from like Warwick University, they did a paper recently, London School of Economics, of course, Henley and Partners, and Christabel Young, who I always quote from Cornell University. I think when you look at a hardcore peer-reviewed research, there is consensus that it is not tax-driven, despite what influencers on social media want us to consider. Part of the attractiveness, I'd say, as someone who's based in Singapore and interacting with other intermediaries, there's a common term that we use in Singapore called soft factors to explain the popularity of Singapore. Its language is English. It's also based on English common law as a former UK colony. I don't know if that's a politically correct term, but that's what it is. So there's a level of familiarity with it. It has arguably the most efficient government on earth. When you go through the immigration process, it is incredibly smooth. And of course, safety in an era where one has to be conscious of those unfortunate issues. On top of that, when you look at the list of the top banks in the world in terms of liquidity ratios and stability, you're going to see the three Singapore indigenous banks in that top 20. I mean, I was looking at Global Finance magazine earlier. When you look at world-class universities, again, you're going to see a Singapore university in the top 20. So you have the infrastructure, the soft infrastructure that makes it really attractive. And on top of that, the fact that, yes, it's not a no-tax jurisdiction, but it is a relatively low-tax jurisdiction. It is territorial tax. Corporate income tax is headlines at 17%, but with deductions and et cetera, the effective tax rate it's not unusual for it to be lower. In terms of personal income tax, it goes all the way up to 24%, I think it is. So again, it's not low tax, but it is attractive. But again, I argue that it is the wider array of soft factors that make Singapore attractive.